Good morning, everyone. Mike and Corey here today. Three topics we're going to talk about. Inflation. News came out today, not favorable. Inflation a little higher than they expected. I'm going to talk about our third ego stock, which is Elf Beauty. And then Corey's going to talk about network effect in stocks. So with that, I'll remind you, this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So let me start off with inflation, which, for the most part, unless you're buying a lot of eggs, we know eggs inflation, went up. I think cocoa powders went up quite a bit. It's kind of like we get these feels for these little pieces, but overall, we look at the basket of consumer prices, and that's what the Fed tries to manage. The goal being somewhere, 2.5% would be a reasonable inflation rate, not 9% like it was a couple of years ago. That's horrible. But unfortunately, it was a little higher this month over month. It was 0.5%, which is, they don't like that because they expected 0.3. So the market is selling off in the red a little bit. It's selling off. It's in the red. It's already come off its lows. A lot of times the market, let's call it, overreacts. But what they're really reacting to is, with inflation remaining a little bit higher than expected, the chances of Fed rate cuts goes down. That cheaper money, the chances goes down. In fact, I saw where, originally they thought the next rate cut was going to be September this year, and already now with this news, they're like, oh, now it's going to be December. So that's what really happens. So what's causing it? Let's see. Here's a shocker. Housing prices haven't come down. I think anybody that's buying or selling a house, probably at least buying a house, certainly knows that. Continues to be up 0.4%. Food prices, while eggs are up a lot more, overall 0.4. And then energy prices, so gasoline 1.8%. And when you say 1.8%, it doesn't sound like that much. Of course, around me, $3 a gallon. So, that's like 6 cents a gallon. You may or may not really notice it, but when you look at the overall basket, they say, it's up higher than they would like. So I'm trying to see if there's anything else. Here's the graph of the consumer price index, and you can see that spike in 2002 where it hit 9%, and thank goodness we're not there. If you remember that year in the stock market, the markets were off significantly. When inflation goes up, it's just not good it's really not good for anyone, other than maybe just your a saver where interest rates might remain a little higher. But for the most part, not good for anyone. So that is inflation. What's the market doing? I'm just showing my screen there. The S&P is down 0.8%. The NASDAQ's down 0.75. And in the big scheme of things, I actually expected it would be down a little bit more with this news. I thought it'd probably be down twice as much, down 1.5%, because when we had things like tariffs and DeepSeek, the market sold off and then it comes back. So we'll see. Unlike those things, which are kind of in the news and out of the news, inflation is always in the news. So anyways, we'll monitor that. And also Powell will be speaking later today. So I'm sure we'll hear more about this, and we'll see what the markets do. So so far I've covered a diagnostic testing company in Natera. Yesterday I covered Rocket Labs, and on this, our ego exponential growth opportunity stocks, we've seen already a variety. Here's another one that you probably wouldn't think of, but it's a diversified basket, and I'm bringing it up, and it is Elf Beauty. And as much as I tend to use products of stocks I buy in, I don't own any Elf Beauty products myself. Hopefully my daughters do. But what it is this is a second or third leading beauty,
Cosmetic.
makeup, cosmetic company. It's, it's funny because their name is ELF, ELF, and EL is Estee Lauder, which would be like the biggest. So their ticker symbols are actually very close. One's EL, one's ELF. But what it is this appeals more to the youth. And the stock is recently sold off, so we're getting it at a discount, a lot tied to TikTok, so because this passes a lot through word of mouth. So I'm going to show you the stock, and you may be like, oh my gosh, why would I buy that? It's even down 3% today. On a 1-year graph, it looks probably kind of ugly. But what it is it's a brand of the future, and that's why we're investing in it. As young people that have less money, they make this a brand they like, and eventually they get older and they have more money, and this brand loyalty will pass through. That's why we believe it has some upside. Part of the reason we think it has the possibility of, say, doubling or tripling within a year is, one, the company is only a $4 billion company, only $4 billion. That doesn't sound like that sounds $4 billion sounds like a lot of money to me, but as far as size of companies, that's small. I watched the CEO last week when they came out with earnings, and they actually guided lower for this year, just saying it's going to be a tough year. They are impacted somewhat with this TikTok upheaval, but they have good products. And what they did is they guided lower. They lowered their expectations, so hopefully they can beat them, right? So
Hey,
hopefully when
Mike,
it,
hit a longer term chart, maybe a 5-year on it.
sure. So hopefully when their next
The-
set of earnings comes out, they're beating and you're seeing the stock surge up. So
Well, and one
go ahead.
thing to note here that's important is Terang, the CEO that Mike mentioned. He's run this company since it was an $8 stock or something, and he's done a fantastic job at every turn. And of course, the fundamentals of the company are at all-time highs right now. So the stock price, the fundamentals, the story, the strong management team, there's really a lot to like with this company.
Yeah. So anyways, this is our third ego stock. Tomorrow I'll cover our fourth. We have 10 of them selected, but part of it is, it's tempting to always pick like high tech or say, well, tech's going to be everything. But we're trying to get a variety of companies that you'd like to be the owner of. And I would challenge you that if you have a younger kid and you're like, hey, just ask them if they heard of this company. They probably haven't heard of Rocket Labs or Natera, but this may be one that they're like, oh yeah, I've seen these things pop up, this viral video on TikTok. I saw something, so we are going to invest in them for aggressive investors, just a small little piece of your portfolio. It's not a major piece, in the hopes that they have a lot of upside potential. So with that, in talking about upside potential, things that cause upside potential, Corey's going to talk about the network effect. Like it's not really good. It's not really good to own a phone if you have nobody to call. But if you have lots of people to call and they all own phones, then we want to own that phone. So I'll turn
Right.
it over to you, Corey.
Yeah, selling that first phone would have been that was the toughest sell. If somebody can sell the first phone ever, then there's a lot you can sell anything. Okay, so yeah, just quickly, what is a network effect? And then we'll kind of look at some of the top network effect companies and the market. And what gave me this idea was a comment made by Josh Brown, who's, a friend of the show, even though he doesn't know it yet. But Josh Brown mentioned that any company that has 500 million or more monthly active users is a buy. That was kind of his statement. And it's like, okay, well, Meta did fall 80% just a couple years ago, so it's probably not that simple. However, he is right that these companies have a large network of people to monetize in different ways, and they are quality for that reason. So what is a network effect? We'll start at the top. More users that are active on the platform, then go to the right. the more users there are, the better the technical capabilities, the better feedback and data the company's getting. And then if you've got more feedback, more data, now you go to the bottom, well, then you can increase the value and the engagement of the network. And then you go to the left, and the more value that you're adding to the network because of that increased data, then you get more word of mouth referrals. It kind of accelerates itself. And then more word of mouth referrals, more users, more data, more value, more users, more data, more value. So that's the wheel. Here's some of the top network effect companies. The crazy thing is 3 of the top 4 are the same company. Meta platforms. Facebook, WhatsApp, and Instagram all have multiple billions of users every month. It's quite a feat. And did Facebook Facebook invented Facebook, but they used acquisitions on these other apps or networks to grow their company. So just very, very interesting. YouTube at 2.5 billion. That's also an American company, Alphabet. Messenger. Meta has another $1 billion.
Another Meta, yeah.
Of course.
And then you throw in Microsoft, LinkedIn. This is my favorite social network that is the most useful. Where if you are looking for a job, building your career, keeping your online resume, I stay in touch with all my past coworkers via LinkedIn because email addresses, phone numbers change, things like that. But you always keep this LinkedIn ID. So.
They're pulling up on 1 billion users as well. I was surprised to see Snapchat this high. It's a pretty small company. I think $18 billion company, and 800 million monthly active users. I know they've had problems monetizing that base, but you could see why the company is compelling. Interesting.
My kids love it. My kids use Snapchat.
Really?
So, yeah. And I think I might have logged into it once, but there's snap streaks and things like that, and it means something to them. So,
yeah, I mean, how could you break a 1,000-day snap streak? That'd be just devastating. I've heard of some pretty crazy things on those snap streaks. People getting out of surgery and got to keep that snap streak alive. It's the top priority. People do go to great lengths there. Interesting. Reddit, an interesting one. The stock's been hot. They're right there at 500 million, but only 997 daily active. So, but the reason I bring this up, I was surprised to see Skype 300 million. 40 million daily. Okay.
It feels like Skype would be one that's on the decline. I used to use Skype, but I don't even know the last time I used it. So it might be on the one.
Right. That's what I was thinking. One that's not on here that would almost be top 10 is Spotify. This is a favorite of Mike's. Spotify had an amazing last quarter. Let me zoom in on this a little bit. And this is Google Trends. You know what we say? Google Trends is your friend. So you can go check live data from Google. It's very nice that they allow just anyone access to this data. So you can see search data for Spotify. It's at an all-time high right now. And of course, people might be searching, but within the last couple of months, it's at an all-time high. So obviously at an all-time high, and the users jumped 35 million just in the last quarter. That's hundreds of millions of people. That's hundreds of thousands of people a day joining. So Spotify's one. Another interesting one, Mike, to watch is Uber. And Uber is a company, they don't get the love in the marketplace, but they have 150 million monthly active users. So, it's not a loved stock, but they could be meeting this Josh Brown criteria, at some point in the future. So interesting. What do you think about that? Do you think there's a magic number for the network effect?
Well, I mean, like I saw there was one, you don't need to pull it back up. Like I saw one company, it was in India, it had 300 million. Well, India has whatever, 3 billion people. So that's not really a threshold. Like, whereas, if you penetrated the market and you have 50% of the US market share, like for Facebook, then you've kind of crossed that threshold. It's really a participation rate. And then, of course, the monetization one. That's the biggest thing. I can tell you a company like Spotify, like I always play this game with my kids where I'll say, hey, I'm going to cancel some of these subscriptions because we got too many. And, I'll be like, hey, and they'll be like, well, we could live without Netflix or maybe Disney, but they're like, you can't cancel Spotify. That is not allowed to be canceled. That is breakdown rebellion level, cancellation. And just so you know, I use Spotify every single day. It's never once been on my cut list. And so when they come out and they say, hey, we've raised our rates, and I have the family plan, we've raised our rates by $3 a month, I'm just like, oh, okay, whatever, no big deal. It doesn't even cross my mind. Spotify, I don't want you to hear this. I don't know who the CEO of Spotify is. You could raise your rates $10 a month and I wouldn't cancel. $10 a month.
Mike,
It'd be instant revenue.
That was Josh Brown's point on Spotify. This is different. Facebook's users, it's free, right? YouTube, yep. Free, or it can be if you choose that. But Spotify, these are paying customers in many cases, and that's a totally different ballgame. Hey, going back to that list, Tencent has ownership in Spotify to some extent, and they also have multiple other apps here, and they do have an ADR. So I'm going to do some work on Tencent, and we'll see, if we're really digging on the Josh Brown thesis that these network effect companies can create exponential value to some extent, then we need to do some work on Tencent.
Now, I will tell you, last thing, give a parenting advice. Maybe this is good, maybe this is bad advice, but with 6 licenses on a family account, and I have 5 kids and I have a spouse, so therefore there's 7 of us, and a family account only allows 6. Well, the kids at first like, well, hey, we're kids, we deserve an account. You can have one since you pay it and we get it. And I'm like, I don't think that's going to go real well with my wife. And I said, what about this idea? There's 5 kids for 4 accounts. How about whoever gets the best grades, top 4, they get an account, 5th guy out, 5th girl out, they don't get one. They did not like that. Yeah, I was trying to, we could do it cleaning rooms, and all that. Fortunately, when my son went off to college, the college had some kind of deal where, you get a Spotify account pretty cheap. And I said, you're taking it so your siblings can stay on my account. So I'm just telling you, that's bad parenting advice, but take the carrots that are out there and offer those carrots out.
That's funny. Hey, we might need to keep talking. The market's at the highs of the day right now, so I'm scared to get off here.
Is this like a filibuster? Like, long as we keep talking, the market goes up, and we just got to keep going.
Yeah, the sellers are distracted.
Okay. Well, thanks everybody. We'll be back tomorrow. Hopefully the market will be even higher. We'll talk about whatever comments Powell comes out with on inflation, as well as other topics. Thanks everyone. Bye.